Is Virgin Galactic trading for cheap? Are you interested in investing in it but want to learn more? Well, what's going on, one and all? It is Seedling Space here, and today we are doing a deep dive analysis on Virgin Galactic. And I'm excited about this one, so let's jump in head first. Alrighty, so today we will be covering what Virgin Galactic is, what kind of products and services do they offer, as well as talk about how they got there. Then we will take a closer look at their financials before talking about what y'all really want to know, which is, should you be buying their stock? With that, let's dive in. So Virgin Galactic is primarily a space tourism company that also provides astronaut training services. And their design uses a unique rocket-powered spaceship dropped from a unique aircraft during flight, where the spaceship will then rocket up towards the edge of space. After a few minutes of weightlessness and really cool views of Earth, the spaceship then glides back down to Earth and lands. So now that we know what they do and what their company's about, let's talk about their mission. So according to their website, Virgin Galactic is a vertically integrated aerospace company pioneering human spaceflight for private individuals and researchers, as well as a manufacturer of advanced air and space vehicles. And this year, they have broken headlines by successfully sending their multi-billionaire founder, Sir Richard Branson, to space. Well, according to the US definition anyways, but let's take a trip down memory lane to understand how they got here. So Sir Richard Branson is a famous multi-billionaire born in London, England. Following his successes with his Virgin Group, which controls more than 400 companies, he set forth in 2004 to create a space tourism business. Hence, Virgin Galactic was born. And even though when we think of Virgin Galactic, we think of their spaceship and their mothership, but what's interesting is that in 2005, Richard Branson founded the Spaceship Company, which was jointly owned by the Virgin Group and a company called Scaled Composites, and was designed to create the spaceship and mothership with Virgin Galactic as the customer. However, in 2012, Virgin Galactic acquired full ownership of the Spaceship Company, and Scaled Composites was then acquired by Northrop Grumman. But I'm getting way ahead of myself. So jumping back to July 2008, just a few years after the company was founded, Richard Branson predicted that a maiden space voyage would take place in 18 months. Then a year after that, Virgin Galactic said it'll happen within 2 years. And while they didn't reach space anywhere near that time frame, both the spaceship and the mothership flew together in their first flight in March of 2010. In December of 2009, Branson stated flights would begin in 2011. Unfortunately, when that time came around, Branson said hopefully it'll be in another 18 months. Unfortunately, these delays kept happening, and many people started to wonder if it would ever happen. Now, I won't bother you with all of the delays, but suffice it to say, it is rocket science, and it is extremely difficult, so we have to cut them some slack. Then by 2014, they had a lot of extensive testing under their belt, and things were looking good, until October of 2014. The spaceship crashed during a fully powered test when the co-pilot had unlocked the feather too early. Now this made the spacecraft experience loads that it wasn't designed to handle, and the spacecraft tore apart in midair and crashed into the ground, killing one pilot and seriously injuring the other. Not only was this a major setback for the company, but brought into question if enough thought was given to human error failsafes. Finally, by 2016, the new VSS Unity spacecraft was rolled out and had its first successful powered flight in April of 2018. Then in July of 2019, the announcement that Virgin Galactic was going public via a SPAC merger was released. There was a lot of excitement by this point because they've completed 5 successful rocket-powered flights and were close to commercial flights. And best part was, you were going to have a chance to own a portion of this groundbreaking company. And then a year later, they hired Disney executive Michael Colglazier to take on Virgin Galactic's CEO role. And then we fast forward again to 2021, with Richard Branson, along with a full crew, were able to reach the US definition of space on their successful, fully powered flight. The stock price leading up to the flight nearly reached space as well. Are they now ready for a commercial flight nearly 17 years after founding? Nope! Commercial service was delayed again until Q4 of 2022. for planned vehicle enhancement and modifications required to scale for high cadence commercial flights. But with the history out of the way, let's talk about the business itself. So what we're gonna do here is we're gonna get right into the meat of the lines of business, products or services, and how they effectively make money. Right now, Virgin Galactic has what appears to be about 3 different lines of business currently, which span space tourism, astronaut training, and rocketry for microgravity research. Their current revenue generation is mostly related to microgravity research payloads that were on board previously powered flights, as well as research into high-speed technology. However, this revenue stream is considered small in comparison to their goal of space tourism, which will drive their revenue growth in the future. Additional to their space tourism, Virgin Galactic will also produce services for astronaut training following their agreement with NASA. Also, Virgin Galactic has teased the idea for high-speed travel, but not much more has been seen on this front. So for now, we're gonna have to forget about it, but keep it in the back of your mind. Alrighty, so with a decent understanding of how they make money, let's take a deeper look at their financial performance, starting with their revenue. Currently, we are analyzing their annual income statements up to 2020, then we will look at their Q3 9-month end to see how their 2021 year is stacking in comparison. From 2017 to 2019, we see a constant growth in revenue, albeit minimal, compared to their spending. Then we see a decline in revenue in 2020 at just $240,000 for the year, in comparison to the $3.8 million in 2019. Hopping over to the Q3 income statement, we see that they have achieved nearly $3.2 million in revenue for the first 9 months of the year. However, without any more flights planned this year, their revenue will likely match or fall below their 2019 high values. With their commercial services not planned to open until Q4 of 2022, we can expect their revenue to stay relatively stagnant into the next year. Peeking at their Q3 report, they currently hold a backlog of about $85 million in customer deposits on their liabilities, with potentially more to come from their 700 ticket reservations. Okay, so with limited revenue, let's take a look at their burn rate to see how long their cash can sustain them. We see most of their spending is a result of research and development, which comes as no surprise as they state that the R&D costs will transfer to cost of revenue once commercial services commence. So current operating incomes are increasingly more negative year over year, with a 2020 burn of negative $275 million. For the first 9 months in 2021, they have already have a negative $238 million operating income, which likely projects them past negative $300 million for the full year in 2021. And with such a large burn rate, let's take a look at their cash to see if they can survive this level of burn. We see that going public in 2019 provided nearly $493 million of cash, and that increased to nearly $679 million in 2020. Now, looking at the Q3 report, we see that they're stating close to $702 million in cash. And being at a burn rate while increasing cash throws up a red flag to me, and if we dive deeper, we see that the culprit is that they have been selling shares to raise additional funds, to hopefully reach profitability. In fact, in the most recent Q3 earnings transcripts, the CEO has stated, "We strengthened their balance sheet with 2 capital raises, giving them approximately $1 billion on hand to design and execute our long-term plan." Now, the $1 billion is referring to both the $700 million in cash and equivalents, as well as the $286 million in marketable securities. While he sounds confident on the earnings transcript, duly note the statement in the quarterly report. They state a more pessimistic warning, saying that although we believe that our current capital is adequate to sustain our operations for a period of time, changing circumstances may cause us to consume capital significantly faster than we currently anticipate, and we may need to spend more money than currently expected because of circumstances beyond our control. And if we take a look back to the beginning of the video, we saw that Richard Branson originally believed that operations would be available in 2011. Well, it's 10 years later, and we're still hearing the same story of continued delays. With their $1 billion on hand and an estimated burn rate of about $300 million per year, they have roughly 3 years before they run out of money, assuming they don't do any more capital raises. So the big question that you want to have answered is it time to buy? And so here's the big question. Does Virgin Galactic finally have its ducks in a row, or is this another story of the boy who cried wolf? And even if they are able to hit the 2022 Q4 goal of opening commercial operations, are they worth buying at the current price? Since they went public via SPAC merger back in 2019, their IPO stock price was about $10 per share. Since the close of the merger, the stock has spent almost all of its time above that mark. However, it's been an extremely wild ride with lows of under $7 per share to highs over $62 per share. Of course, with the latest announcement of another delay of commercial operations and additional capital raises, the market has turned bearish on the stock over the last few months, and the stock has steadily declined down to the current price of roughly $14 per share. And according to Yahoo Finance, current sentiment seems to stand just above the hold level, even though the stock has received multiple downgrades in the last few months. Looking at price targets, the low is down to $15 per share and the high being $50 per share with an average about 27. The low price target is currently sitting above today's share price, which could be a good sign. However, the general growing pessimism mixed with uncertainty around their ability to hit their 2022 Q4 operation milestone personally gives me pause in buying them right now, especially with the likes of Blue Origin, who's continuing to conduct commercial flights and taking market share away from Virgin Galactic. I do, however, think that Virgin Galactic could be a potential buy one day as it gets closer to commercial operations, especially at a cheaper buy point. But remember, I'm just some random guy on the internet who loves space technology and investing. So please, do your own research before deciding whether investing is right for your portfolio. Who knows? The stock could be ready for a major breakout and you could make the big bucks. It's up to you to find the treasure. But for now, that is it for the end of this analysis. I hope you all found it valuable. If you want to see more videos like this one, please subscribe. Also check out our new Facebook page, where I'll be starting to post more daily news and things like that. And this is Seedling Space, signing out.